Hi everyone, welcome back to Technical Analysis Fundamentals. In this video, we are going to be talking about support and resistance and why those two technical analysis tools are important to your trading. First, a definition. A support level is a price at which there is demand or buyers for a stock. So for example, if a stock is trading around $50 and drops to $45 and buyers purchase the stock at that price, and the stock moves back up to say $47 or $48 and then drops again to $45 and then rises again to say $52 and within a week or two drops back to $45, the $45 price point has become support for the stock. As long as the stock holds at that price and then rallies back up each time it touches that price, that's a support level for the stock. A broken support level can be used as a stop to stop a trader out of a position, and it can also be used to initiate a short position. So let's say you own a stock that you've purchased at $47 and it trades down to $45 and rises back up to say $48, but you're looking to sell a stock at say $55. As long as the stock trades down to $45 and rises back up, you can wait to reach that $55 level. But you've got to stop at $45 because you know that's support. So when the stock trades down to $45 the next time and then trades down further to $44.50, that would tell you as a trader that you need to exit that position, take your small loss at that point. On the flip side, if you don't have a position in the stock and you're watching it and it trades down to 45 and back up to 48 and down to 45 again, and you see it go through 45 and drop to 44.50, you may want to initiate a short position in the stock at that point, because often what happens is the support will become resistance. So let's define resistance. Resistance is a price level where there is supply or sellers of a stock. Resistance can provide an opportunity to sell a stock short or to sell a long position that you're holding in the stock. As we just talked about a second ago, a broken resistance level, when a stock is moving up through resistance, can be used to purchase a stock, or if you're short a stock and it breaks through a resistance level, you can use that as a stop to cover your short position. One important factor about support and resistance is that the longer support or resistance has been in place, the more important those levels are. So a break through either a support level to the downside or a break above or through a resistance level to the upside, if that level has been in place a long time, is a great opportunity to either go short a stock that's breaking through support or long a stock that's breaking through resistance. Now let's look at an example of support and resistance and how we draw support and resistance lines. For example, we're going to use Emerson Electric Company, or EMR. As you can see here, we're looking at a daily chart, but support and resistance levels work on all time frames. As I said earlier, the longer the support or resistance level has been in place, the stronger that level will be. First, we're going to look at support. And in this chart, we see the stock move down to approximately $66 and change in February. The stock moves up to the $74 range and then comes back down again to the $66 range. It goes a little bit lower. And here's an important point to make when looking at support and resistance, and that is that you need to give a little bit of room for your support and resistance levels. The higher dollar value of the stock you're trading, the more leeway you need to give in those levels. If it's a low percentage move through the support or resistance, it should not trigger a stop. It's up to you the exact amount that you want to see a stock move through a support or resistance level to trigger a trade, but in most cases, you will not use the exact level. And that's why you'll often see a range drawn when we're looking at support and resistance. So this support level could begin around 66.25 and go down to 65.14, which is the low on both April 6th and April 2nd. Now let me show you how to draw the support line. In the upper left, you'll click this bar and you'll get a menu, and we're going to draw a trend line. So basically we're going to click our mouse. And again, don't worry about it being exactly on a number, just an area. You want to eyeball this area. So we're going to draw a straight line across and click again, and that'll lock the line in place. So now this is our support line right around 66. And if we look with Emerson, right around $74, there's a resistance level. As you can see, multiple times the stock trades down to the 66 level, back to 74, down to 66, back up, not quite to the 74, but up to the 71, back down to 66, back up to the 74 level again, down and up, and so forth. As you can see, recently the stock broke above the 74 level, which would trigger a buy if you're trading this stock, or it might trigger a trade to cover a short position. And I'll draw now the resistance level in the same way. I'm going to click and click again. And now we have both our support and resistance level. As you can see, you can make several trades in this stock over the course of the year using these levels. Selling when the stock gets in the $74 range, and then buying back the stock when it gets somewhere in the $66 to $67 range. Thank you for watching this video on support and resistance, and we hope to see you in the next video where we'll talk about levels, trend lines, and channels. See you there.